So partially your property will consider as let out. And when you let, you will receive the rental income. So premium received is considered as rent. And rental income tax you will pay. So how you will pay the income tax on lease premium? You can see the formula: premium received minus 2% into n minus 1 into premium received, and then you will get the taxable premium. Taxable premium mean property income, non-saving income. Clear?
Yes, ma'am.
N mean number of year of lease. Now please write down a question. Mr. A lease out a building at a premium of £20,000 per annum or £20,000 for 20 years. To Mr. B. Now requirement is calculate taxable premium for Mr. A. So Mr. A lease out a building at a premium of 20,000 for 20 years to Mr. B and calculate taxable premium for Mr. A. Okay. So how to calculate the taxable premium? Formula is premium received, which is 20,000 less 2% into n. N mean 20 years minus 1 into 20,000 premium received is equal to, please tell me the answer.
$7,600.
And what is taxable premium?
$12,400.
And this is your property income, and we'll go to the non-saving column. Done?
Yes, ma'am.
Okay. Next topic, room relief. Room relief mean if room of an owned house mean you in which you are living, your principal private residence, PPR. So owned house, principal private residence mean in which owner is living himself, and then he will let a room or rooms out of his property. So if rooms of an owned house are let furnished in which owner himself is living, then he will get the rent a room relief. And if rent a room relief available, then allowed expenses will be higher of 7,500 and actual allowed expense. So choose the higher of, and that will be your allowed expense then. For example, please write down a question. Mr. A let a furnished room of an owned house at a monthly rent of £1,000 per month and other allowed expenses, that is repair and maintenance expense, is £500 per annum. Council tax £1,000 per annum. Calculate taxable property income. So what is rental income? 1,000 into 12,000
12,000
less allowed expenses. And you know, when rent a room relief available, then allowed expense will be higher off. Number one, 7,500, and number two, actual allowed expense. And in this question, 500 plus 1,000, both are actual allowed expenses, mean 1,500. Choose the higher of which is 7,500. So deduct 7,500. And what is the property income?
4,500.
4,500. Done?
Yes.
That's it. Okay, next topic. Last topic of this chapter is Real Estate Investment Trust, REIT. So, you know, REIT, real estate, in the main income tax format, you will deduct, you will gross it by 100 over 80 and place in the non-saving column. Now, what is this income? You know, what is Real Estate Investment Trust? It's an organization which collect finance from general public. I mean, you will invest, I will invest, many people will invest in it and invest in the properties. They will invest our money in properties and then let those properties and earn the rental income. And whenever they will sell, they will earn the capital gains. So that is the concept. So we are investors, we will receive income, property income. How we will pay the tax? So next point, withholding tax is 20% deducted. I mean, already advance tax 20% deducted. And this is property income. So income is non-saving, you know, property income will go to the non-saving column. So we investor will gross it by 100 over 80 because already 20% advance tax is deducted. So always gross it by 100 over 80 and then place in the non-saving column. That's it. Done?
Yes, ma'am.
Just 1 second.